Okay, so this one you sent in, it's juicy. It's a story about insider trading. You know, that thing where people know a stock's going to pop and, well, let's just say they make some questionable choices. And this time, it involves Infosys, one of those huge GE tech companies in India.
Yeah, this is a big one. And what makes it even more interesting is we've got two sources that kind of lay it all out. One's an article super detailed from the Economic Times in India, and then there's this video breakdown on YouTube by Mint, the finance channel.
So we're really getting a good deep dive here. And what's crazy is all the different pieces. We've got this massive deal, a suspicious phone call, even a mother-in-law's illness. It's like, where do you even start? Yeah. But I guess first things first, who are the players in this whole drama?
Right. So we've got Keyur Maniar, he's a senior VP at Wipro, another big tech company. And then there's Ramit Chaudhri. He's working at Infosys BPM.
Infosys BPM. That's like a separate part of Infosys, right?
Exactly. It's a subsidiary. But that connection between Maniar and Chaudhri, it's key here. Their former colleagues used to work together, and they stayed in touch. Which becomes a big deal when you consider what happens next. Infosys lands this huge contract, a 10-year deal with Vanguard, worth almost $2 billion, $1.89 billion to be exact.
Wow. Okay, so that's going to make some waves for sure.
Oh, yeah. The stock jumped almost 5% right after they announced it. I mean, think about it. If you knew about that deal beforehand, you could make a fortune.
And I'm guessing that's where this whole insider trading thing comes in. But let's break it down a little, maybe for anyone who's not super familiar with finance stuff. What exactly makes insider trading illegal?
It really boils down to fairness, right? Like, imagine you're trying to invest, you're doing your research, picking stocks. Insider trading is like someone getting to peek at the answer sheet before the test. They're using information that regular people don't have, information that's not public, to, well, get an advantage. And that's just not cool.
It totally messes up the whole point of the market, right?
Yeah. Exactly. If people think that the market is rigged, if they think it's not fair, then why would they bother investing? It discourages everyone from participating, erodes the whole trust in the system.
So where do Maniar and Chaudhri come into all of this?
Well, Chaudhri, over at Infosys BPM, even though it was a separate subsidiary, he still had access to some pretty sensitive information. You know, sometimes with those big deals, information flows between different parts of the company.
So even though he wasn't directly at Infosys, he could still get the inside scoop.
Right. And just a few days before the Infosys-Vanguard deal goes public, he has this phone call with Maniar, a 20-minute call.
I'm guessing. Not about the weather.
Nope. And right after that call, Maniar starts making some moves in the market. He buys something called call options for Infosys stock.
Okay, hold up. Call options. For those of us who maybe don't speak fluent Wall Street, what are those and why would he be buying them?
So basically, a call option. It's like betting that a stock price is going to go up. If it does, you get to buy the stock at a lower price and then sell it for a profit. It's a way to kind of multiply your gains, but it's also riskier.
So Maniar is betting big that Infosys is about to take off.
Huh?
And I'm guessing he was right.
Well, SEBI noticed. SEBI's like the market watchdog in India. They saw Maniar's trading, and right before that deal was announced, his activity in Infosys jumped like crazy.
Like, how crazy are we talking?
Almost his entire portfolio. He went from doing practically nothing with Infosys to suddenly putting everything on it. That's a huge red flag.
No kidding. So that's what gets SEBI on the case.
Yep. Before and after that period, there's basically no activity. It's that sudden, massive shift. A classic sign of insider trading.
Okay, so what did SEBI find out?
Well, they dug in and found that Maniar made a pretty nice profit, about 2.6 crore, which is over 315,000 US dollars from an investment of roughly 95,000. Not bad for a few days' work, huh?
That's wow. But Maniar had an explanation, right? He didn't just say, yeah, I totally did it.
Oh, he had a story. He said that phone call with Chaudhri, nothing to do with the deal. They were discussing his mother-in-law, she had cancer, and they were talking about treatment options.
Come on. Seriously. That's a little too convenient, don't you think?
Yeah, SEBI wasn't buying it either. They looked into it, couldn't find any medical records to back up his story. So, with all the evidence stacked against them, things weren't looking so good for Maniar and Chaudhri.
Yeah, so what happened? What'd they get?
Well, both of them, Maniar and Chaudhri, they got hit with a pretty hefty fine, like 30 lakh each, almost 37,000 US dollars.
Oof, that's gonna hurt.
Yeah, and on top of that, they had to pay back all the money they made, you know, those illegal gains, with interest. Oh, and they got banned from trading for a whole year.
Wow, so they really came down on them. But you know, this whole thing, It makes you think, right, about ethics and responsibility, especially for people who work with, like, confidential information all the time.
Absolutely. This isn't just about, making a quick buck. It really raises some serious questions about, like, the whole culture in these companies, the responsibility we all have when we're trusted with sensitive information.
I bet some people would say, well, isn't it just smart to use your connections, get ahead? Where do you draw the line between networking and insider trading?
That's a really good question. And that's where ethics come in. Networking is about building relationships, sharing information openly. Insider trading is about taking information that's not meant for you and using it for your own personal gain. It violates the trust that's necessary for like a fair and transparent market.
Right, and like we talked about earlier, it messes up the whole system. People feel like the game is rigged. Why would they even play?
Think of it this way. What if you knew that every sporting event, every game was fixed? Would you even watch it? Would you care who won? It's the same principle. Insider trading erodes the integrity of the whole system. Everyone loses.
So how do you even prevent this kind of thing?
That's where regulations and enforcement come in. You've got organizations like SEBI, they're like the watchdogs, they monitor all the trading activity, investigate anything that looks suspicious, and they take action if people break the rules. They're like the referees, making sure everyone is playing fair.
This case definitely shows how important those regulators are. It's not just about punishing the bad guys, it's about protecting the whole market.
Absolutely. And it goes beyond just like enforcement. They're also educating the public about how dangerous insider trading is, and they're trying to promote, ethical behavior in the whole financial industry. It's a constant effort to build and maintain trust in the system.
It's kind of like building a house, right?
Yeah.
You need the strong regulations as the foundation, then ethical conduct as the walls, and public trust is like the roof. You take away any one of those and the whole thing could fall apart.
That's a great analogy. And it's important to remember that ethics aren't just for big companies and, high-powered executives. We all face ethical dilemmas in our everyday lives, at work, in our relationships, even online.
That's so true. There's that saying, integrity is doing the right thing even when nobody's watching.
Yeah.
But how do you actually do that? What does that look like in real life?
Sometimes it's as simple as not gossiping about a coworker or refusing to use information you overhear if it wasn't meant for you. It's being aware of the power of information and using it responsibly.
And remembering that even like the small things can have a big impact. Like you said, it's about asking yourself, what kind of person do I want to be? Do you want to be known for your integrity or for being someone who cuts corners and takes advantage of others?
Exactly. Building a reputation for being ethical takes time and it takes effort. But it's worth it. It builds trust, it strengthens relationships, and ultimately it makes you more valuable in any field.
There's that other saying too, character is who you are when no one is watching.
Yeah, perfect. And in a world where information travels so fast, protecting your reputation and building trust is more important than ever.
So as we keep going deeper into this Infosys case, let's talk about something else. Remember Maniar's explanation for that phone call? He said it was about his mother-in-law's cancer treatment. What do you make of that?
It happens a lot in these cases. People get caught and they try to come up with any explanation they can, hoping it'll create some doubt.
But in this case, it seems pretty weak, especially since SEBI couldn't find any proof to back it up.
Yeah, it definitely backfired. Instead of helping him, it probably made him look even worse. It just goes to show that honesty and transparency are always the best, especially when you're dealing with something as sensitive as this.
It's like that old saying, oh, what a tangled web we weave when first we practice to deceive.
For sure. Deception almost never works. It destroys trust, ruins relationships, and it always catches up to you in the end.
And beyond just the legal stuff, think about how emotionally draining this must have been for everyone involved. The stress, the anxiety, the potential damage to their careers, their personal lives.
You're right. We tend to focus on the money side of things, but the human cost is huge too. The impact on families, friendships, reputations, it can be devastating.
It really makes you think actions have consequences.
Yeah.
And sometimes those consequences are much bigger than we expect.
That's true. And it highlights how important it is to make ethical decisions, not just in finance, but in every part of our lives.
So as we wrap up this part of our deep dive, we've covered a lot. From the details of the Infosys case to the bigger picture of insider trading. But before we move on, let's pause for a second and think about the key takeaways. What stands out to you?
Well, I think we've seen how even something that might seem small can have like a ripple effect, how doing something like insider trading, it undermines that whole idea of a fair market. And we see just how crucial these regulators are, like SEBI, in protecting the system.
Yeah, and it's not just about the corporations and the big guys, right? It's a reminder that ethics are important for all of us.
Yeah.
We all have to make ethical choices every day. And those choices, well, they make a difference. They shape who we are and the kind of world we live in.
Exactly. And it takes us back to that question we were talking about before. Where do you draw the line with confidential information? What are your own personal boundaries?
It's a great point. I mean, we've been focusing on this high-stakes financial world, but this applies to everyone, even if you're not dealing with, like, millions of dollars.
For sure. Think about it. What if a friend tells you a secret, something about a coworker? Do you tell someone else? Or, what if you overhear something at work, something important that could give you an advantage, but you weren't supposed to hear it?
It's those everyday situations that really test us. You know, it's easy to say, oh, I'd never do something illegal like insider trading, but sometimes those smaller choices, those are the ones that can be slippery.
It's kind of like working a muscle. The more you practice making those ethical decisions, the stronger your integrity gets.
And the more we all do that, the more we build a culture of trust and transparency. Like that saying, what you do speaks so loudly, I can't hear what you're saying.
Yeah, it's not just about following the rules. It's about choosing to do what's right, even when it's hard, even when no one's looking.
So as we finish up our deep dive into this Infosys case, I think the big takeaway is that this isn't just about finance, right? It's about the choices we make. It's about the power of information and the responsibility that goes along with it.
It's a reminder that each one of us, we have a part to play in building a world where fairness and transparency, ethical behavior, that's just the norm.
And that starts with each of us making those right decisions, even when it's tempting to do otherwise.
Because in the end, it's not just about staying out of trouble. It's about living a life you can be proud of.
Couldn't have said it better myself. So next time you come across some confidential information, take a second, stop and think, what are the consequences of what you do? Remember the lessons we learned from this Infosys case.
Yeah. Knowledge is power, that's true. But it's how we use that power that's what really matters. That's what defines who we are.
Thanks for joining us on this deep dive. We hope you got something out of it and that you keep thinking about these important questions.
Remember, ethics aren't just rules. They're like the foundation of a fair and just society.
And we all have to do our part to build that society. Thanks for listening.